ARM Holdings has increased its revenue from $2 billion in 2021 to $4 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 20% during that time. Furthermore, the management team has told investors that they can confidently expect to grow revenue at roughly 20% for the next 2 to 4 years as well. The company's gaining market share over the x86 infrastructure for data centers, and the increasing computing devices worldwide and the Internet of Things are requiring increasing shares of data capacity and computing capacity in devices. ARM's specific architecture has the biggest advantage in power consumption, and power consumption is becoming one of the most important things when you're building a data center optimized for AI, because artificial intelligence consumes a lot more power compared to previous generation technology that operates based on CPUs instead of operating primarily based on GPUs. Now, that being said, it hadn't been doing a good job in generating returns on invested capital. It was heading in the opposite direction from 22 to 24, down from 30% to 3%. But it has since improved this, improving from 2.9 to 12.8%. The company has been and continues to invest in the technology because they're seeing such good returns. They're seeing such good demand from marketing. It's been on a downtrend, falling from 61% in 2021 all the way down to 4.5% in the most recent trailing 12-month period. The most significant reason is ARM is investing, growing its employee base, growing the talent base in order to fulfill the demand placed upon it from participants. They want ARM to continue to innovate and incrementally improve the technology because the partners are investing and want to spend money in the categories. And so ARM is investing so that in future years, they'll have the technology to keep up with the incremental improvements in their partners' ecosystem. Furthermore, I calculated a fair value based on my proprietary discounted cash flow model, and the intrinsic value per share came to $83.50. The current market price is $137. So in both valuation methods, whether I'm looking at the market multiples method or whether I'm looking at my discounted cash flow method, it points to an overvaluation in ARM Holdings shares. And so I will be reiterating my hold rating for ARM Holdings for 2026. I updated my rating here on December 2nd, rating the stock as a hold.
Click the link below to watch the full video.